It's your boy, and you already know what time it is, man. Look, we got to get directly down into what's going on in the social media world of the stock market today. Man, we're going to talk about how Snapchat pulled back 25% on the day in the after hours alone. And is that ride still continuing? As a matter of fact, I need you to stay tuned. In today's video, I'm going to give you my new price targets that you should be looking at if you're looking to take a long-term position on Snapchat. And I'm going to give you prices that you should look at to prevent you from catching a falling knife as best as I can. So we're going to talk about that today, but then we're also going to talk about how do we get into the scenario that we're currently sitting at today with Snapchat, as we're looking at Apple's iOS 15 as being the main problem in the situation dealing with Snapchat's actual downslide in the after hours today. So let's look at the stock first. Let's check it out. Let's look at what the stock is looking like today. You'll see it's currently sitting at $75.11 due before market close. And then as the market close, it completely tanked down to $52.42. That's over 25%, but it has since yet recovered, up 21% down on the day, $58.90. Well, why do I say that Snapchat is blaming Apple iOS 15 for it? If you have not yet seen the headlines, check out this headline on the Wall Street Journal. You'll see it says Snap's stock plummets as it blames Apple privacy changes for hurting its ad business. Well, what I'm going to do today with you is actually we're going to sit back, we're going to look at this earnings transcript, the press release that has came out on Snapchat about the whole saga that they're dealing with right now, and we're going to break that down. Then we're going to get into details, and then I'm going to give you my price targets, and man, we're going to go from there. So let's start with what's happening over in the world of Snapchat. Well, you'll see these are the prepared remarks coming from Snapchat executive team, and we're going to get directly into them. So what we're going to do is they're actually going to start with what the CEO and co-founder Evan Spiegel talked about, as it came down to dealing with Snap. Okay, so you'll see that the daily active users grew to 306 million. That's for the fourth consecutive quarter that they have seen year-over-year growth of more than 20%. Okay, that's nice, right? Overall, the rest of the world's smartphone population, not North America and not Europe, just the rest of the world, our smartphone population was currently more than 2 billion people and continues to grow. This is something huge and something to pay attention to as Snapchat is trying to become a global platform in its social media arms race, okay? So let's pay attention a little bit more here. You'll see that 57% year-over-year growth to $1.6 billion. It's the first time that Snapchat has eclipsed that mark in a quarter alone. And now they have more than 52 million in free cash flow and adjusted EBITDA of about $174 million. Well, let's get into some of the details that we need to check out here, right? So you'll see that they missed on their lower end guidance of about $3 million. And it's some key factors that they're talking about here. And that mostly deals with the changes into advertising tracking on iOS and macroeconomic factors that have impacted our advertising partners. Okay, so now this caught my attention at this point. Now, I already knew going into this that they was going to talk about Apple. But what I did not expect is hear about these supply chain macroeconomic factors that we're about to get into. And we're going to talk about this here a little bit because I've been talking about this a little bit more, how, suppliers have been actually dealing with actually getting ahead of the holiday season and actually putting inventory in to place. But Snapchat has a different perspective than what is actually being said out in the mainstream media. So let's look into it, okay? Advertising business was disrupted by changes to the iOS ad tracking, okay? We anticipated some degree of business disruption as Apple provided measurement solutions did not scale as we had expected, making it more difficult for our advertising partners to measure and manage their ad campaigns for iOS. So why is that important for them to say? Well, from my perspective, and only in my opinion, because I'm only guesstimating at this point, basically is that advertisers uses the platforms that Snapchat or Facebook or even the likes of Pinterest actually provides them with and figures out how to use that platform to its advantage and figure out how psychologically they can actually get more advertisements in front of the right people to actually purchase product. And obviously with the Apple system that we're going to find out here in a second is that it's actually holding back some of those algorithms that people like to use in the advertising game to take advantage of opportunities to get you to purchase more inventory. So we'll see that in here in a second, okay? So we'll see that advertising partners faces a variety of supply chain interruption and labor shortages, which reduces their short-term appetite to generate additional customer demand through advertising at a time when their businesses are already supply constrained. This is what I was really surprised about. I'm thinking to myself, what suppliers are we talking about? What advertisers are we talking about? Because basically, we was thinking that a lot of this stuff was actually going to be behind us, as we already seen what happened in 2020 as it was impacted by the holiday season. But if we're heading into Q4 and we're still seeing supply constraints, that means that we may have a bigger problem on our hand as it comes to more emptier shelves than we was even expecting as we go out into the economy to purchase things during this upcoming holiday season. So we'll see here in a second as we skip on across as we get into a little bit more here. So we'll see. We are continuing to work through the ongoing changes to digital advertising driven by Apple's app, which was introduced as part of iOS 14. Then you'll see here, I'm going to hide myself for just a second. You'll see, broadly speaking, these changes have upended many of the industry norms and advertisers' behaviors that were built on IDFA, okay, device identifier for advertising, and now requires a double opt-in by users in order to access directly. So what does that mean? That means that all of a sudden there was probably a one layer, a single layer opt-in at one point in time where you basically said, you're fine with advertisers actually getting your data, using your data for analytics, using your data for marketing, all those things, right? But now there's a double opt-in procedure where basically if you're an iPhone user, I don't know if I can actually pull it up right now, but there's certain apps when I go to them, if this is an app that's supposed to be tracking anything with my location, it basically asks, hey, do you really want this app to actually ask for your location? So let's see if I can actually find you one here. Let's go to like, let's see if I can get into like American Airlines or something. Nope, not that one. Let's see if I can find you an app. Grubhub. Let's see. See, you see it says allow Grubhub to track your activity across other companies' apps and website. Well, I won't allow it to if I don't want to, or I can say ask app not to track. So that's that double layer that is actually there. So that's really the part that you need to pay attention to, is that this thing is so strong and powerful that it's not allowing you the opportunity to get in on apps that you don't want to have tracking you. So it even reminds you as you're getting ready to go into the app, do you really want anything to do with this app tracking you? That's that double opt-in that I see that users actually have to be accessing directly each and every time that they want to. So that hinders advertisers when you have to go through this rollout of that type of thing, right? So now you'll see here that we have Apple rolled out SCAD Network or SCAN, a proprietary solution to allow app-based advertisers to continue measuring their advertising on iOS. Well, this basically came out to saying that the initial results using SCAN were generally aligned with prior industry standard solutions. So meaning iOS 14.5 came out, no problem, right? Everything is on the up and up, like usually how everything was with the industry standard. Well, look at this difference now. Over time, we saw SCAN measurement results diverge meaningfully from the results we observed on other first and third party measurement solutions, making SCAN unreliable as a standalone measurement solution. So basically these advertisers had no choice but to use this, then found out that using this was not actually helping the bottom line, and it was actually affecting how they was actually rolling out ads and how that was actually affecting Snapchat, because they was not getting the same volume of ads actually provided to them from advertising partners. So as our advertising partners explored and tested SCAN solutions, a variety of concerns about its limitations, because advertisers have their own unique optimal parameters to measure return on investment for their business. But SCAN requires them to use Apple's fixed definitions of advertiser success. So basically, it's either all or nothing. Either you get in line with what we're providing you on iOS through the SCAD network, or don't use it because you're not going to get anything else from us, because we're going to allow for users to actually block you out. That's basically what I see here. So Advertisers are no longer able to understand the impact of their unique campaign based on things like the time between viewing an ad and taking an action, or time spent viewing an ad. So this is going to be important here because, right, anytime that a person watches an ad, I'm pretty sure if you get over 5 to 6 seconds of view time on an ad, that means that that person is actually interested in what you're actually talking about. And they're trying to use this information, try to feel like, okay, when can you actually decide when you actually going to either buy this or you're going to be interested? And they're trying to see that, and they're trying to see how fast they can get more involvement and interaction from the user who's actually looking at this ad to actually get down to it. So let's look at what else they got to say here, right? Real-time campaign and creative management is hindered by extended reporting delays. Advertisers are able to target advertising based on whether or not people have already installed the app. So that's really important. How do you know that people are really buying your product or interested in your product if you can't see how long it takes from the time that they actually downloaded your app to using your app to actually purchase anything at all? That's really kind of creative of Apple to make these things harder on them, because I'm pretty sure it has to be a way that Apple is going to benefit from this. So we're going to hear about this coming next week, next Thursday, about how all this press roll out about how iOS 15 is really harping on social media and advertisers, and then see how that's going to play in Apple's favor. We're just here to pay attention to that. So advanced conversions, that's something that we need to look at here, which works seamlessly with our mobile measurement partners and use aggregated privacy-safe methodologies to help advertisers understand the impact of Snapchat in their media mix. So this is what Snapchat reaction is to all the things that's been happening with iOS 15. This is one of their first solutions that they're coming out with, is to now launch for all advertisers advanced conversions on their part, right? And they say they are seeing early adoption of this, where approximately over 50% of the app advertisers are opting in to use it via the media measurement partner or direct integrations. And this is like their workaround for dealing with iOS 15, and media and more advertisers are looking to keen to this. So they have something to actually put in place, it looks like. So in direct response of all the things that's going on, they have seen direct response business grown over 50% in the last year. So they've seen this grow over that time in the past few quarters, and now this is what they're looking at right now to see that the brand is going to continue to grow by keep on using direct response business to move it along, right? So separate from iOS issues dealing with Apple, they say that advertising partners are facing headwinds in their business related to disruptions in the global supply chain, as well as labor shortages and increasing costs. They expect that this is impacting advertising in Q4. So this takes us back to it again, right? Are we really expecting numbers to be lower in Q4 reporting when we get through this holiday season? It may just be that way. Now, we've seen a company like Crocs kill it today, but then in the back foot of all, you're hearing more supply shortages are coming. So this is going to be interesting. This is going to be an interesting story to me, right? I think this is going to be something that you're really going to have to pay attention to as we go forward, right? And I'm about to get ready to close this out. But you'll see, I just want to show you some highlights though here, that you're seeing gross margins were 60% in Q3, okay? And that they're still investing in the company for long-term growth. So this is still a growth story, but it's just not growing as fast as some would have expected as Facebook has grown. So, and they're using machine learning to support direct response advertising business, okay? So I just want to make sure you have all the data, because we're about to get ready to get into prices that I'm looking at here. And you'll see that they expect measurement and optimization foundations of the digital advertising economy will continue to experience significant changes in the months ahead, including additional disruptions we expect related to the adoption of iOS 15. So I've highlighted 6 times in this article, in this press release, supply chain shortages are a problem for advertisers, okay? So that tells me that we need to be paying a lot more attention to what they're saying in advertising, okay? So let's get into one of the things that I want you to pay attention to here, right? So we already know that it's basically an advertiser. So we basically have our advertisers, okay? I don't know why it does that every now and then, but it does. I gotta find out why. But you get your advertiser here, okay? But then you will have Snapchat off to the side as the next leg in the race. Then as Snap provides you the service that you need through an ad, as you're interacting inside the application, the customer sees the ad, and this leads to inventory being purchased. Okay, see that? You see that loop? That's that loop right there, right? Well, this is actually being reversed a little bit here, right? It's actually being transposed just a little bit, because now what you're seeing is that the inventory is now telling the supplier, the advertiser, to what to send to Snapchat as an ad, and Snapchat is providing that to the customer, which is actually sending a demand signal to the inventory that's lacking. So this is out of whack. This right here is actual a problem at this point in time. This is really a problem. This should not be this way. And that's really what we're seeing a big issue at. So, okay, got it. Understand, supply chain issue, Craig. So how are we playing this? Like, how are we taking advantage of this if you was to take advantage of it? Well, social media stocks are really weird to me, right? I think that you can play them for higher success. Facebook is obviously one of the biggest companies in the world. But also the thing is, too, is that social media applications are driven by human eyeballs on everything. Everything in the world is driven by some type of human interaction, right? I got it. But this is a growth story that's happening based on years of longevity of mankind. As long as we are reproducing as humans, you're always going to see social media have a need. It's just which social media applications are still going to be around over time. Now, Snapchat is actually entering into the world of augmented reality, AR. I saw, that's where they're trying to leverage advertising dollars at now. So that's kind of a weird thing to see. And you got to actually do a lot more deep diving into that to understand it from a bigger perspective. But let's look at the chart and let's talk about what we're seeing for price targets here. So we're going to head over to Webull and we're going to get directly into that. So we're going to head over to the 3-month chart because we want to talk about support zones here, right? So we've already seen the drop off. Now we've seen this big leg down. Now we're already in this range of 58.90. So we're here now, okay, with this green line right on my support level. All right, so we're very soft that I drew here, just so we can see it. But right now, if you're in this area and you're interested in buying Snapchat, I think this is a great area to start thinking about between here and 61.20 to actually put 25% in if you was actually going to dive in with Snapchat. Now, the reason why I say this, because this could still be a falling knife, but you don't want to be catching the falling knife at this level. And sometimes a falling knife is not really a bad thing either, because if it keeps going down and if you're a dollar cost average in at this level, you're still making good money on the recovery. So you just want to be careful about the level that you want to get in it. Now you've seen obviously that Snap can go back to $75. It's already been there. The high is $83, okay? So we know that Snapchat has retested this, but now we're at these levels where it can sit down here for a while. So if you're okay with the pain of sitting down here or sideways consolidation, there's no problem. But if you're taking a 25% entry right now, then you catch it at 50.04. If it pulls back to that level, that's a 50% entry. So now you're going 50% in. So now you're 75% in, or you can put another 25% in at 47.65 to equal out to 100% of what you wanted to invest. Or you can actually wait on that first 50% and make this a 75% entry at 47.65. I think those are great key levels to take advantage of if you used to see those. But buying here at the 58.90 to 61.20 level is a good entry to start your position at. Would I start an entry there? Yes, I would. I would start an entry there if I decided to. So I think that's where you should be paying attention to Snapchat at this point in time if you're actually looking at this on a bigger scale. Like looking at this chart, you're not really seeing a huge leg that it can't recover to, right? So for me, this 25% is a key region to pay attention to here, okay? So If you like the type of psychology that I bring to the stock market and to talking to you about stocks in a realistic manner each and every day, consider using that first link down below where you're going to be a part of my Discord, because what I do over there, I give you every short and long-term trade alert I ever make, whether it's in a public or private account. And I even give you my psychology each and every day, and I do live streams and everything else with the family over there. Now, I also want you to know, if you found value in this content, definitely go ahead and like that type of content so I know that I keep on providing the same type of content that you love to see. And subscribe to the channel. That's another signal that you can send to me. Let me know how much you love the channel too. So if you do that, please bang that notification bell so you can be notified each and every time I drop way more high content like this. And I'm going to leave you with this when it comes to Snapchat. All social media stocks are on a downslide today. They're all waiting for Facebook to recover on Monday, right? And show you what it's actually supposed to be worth. They're actually calling that undervalued at this point in time. Where if Facebook is the biggest giant of social media right now, and they think that's undervalued today, what does that mean about Snapchat? Is it undervalued or is it overvalued? Well, we definitely seen a slide back 25% because of what the analysts and what Wall Street thinks about what's going on with iOS 15. To me, I think this is an opportunity of a lifetime to take advantage of Snapchat if you think that this growth story can last 10 years. Because what you was talking about looking at today at $58 in a 10-year growth story, you could be looking back at this stock and it could be a $200, $300 stock in no time if you believe that this thing can go for 10 more years. That's just the way I look at it. What's the risk that you have? Do your own due diligence, but understand that this is probably a play that's going to turn profitable one day, and when it turns profitable, everybody's going to want to be in on the play, and bigger institutions are going to actually hold in on this stock. As a matter of fact, let's look at it real quick before I get you out of here. And you see this. Look at the holdings of this. Let's look at, let's see. Nope, I have holdings. See, they be playing with me sometimes. Nope, that's not it. I'm going to get you the institutional holdings. Give me 1 second. Let's do that. Oh, you know what? I'll show you. Look at this. I'll show you how to do this at the same time, right? So if you are actually ever in Webull and you want to see what the institutions are actually holding this stock, you go over here to these right lines, these dashes over here, right? You hit this, you hit add widget, come over here, you see institutional holdings. You add it. Boom, there you go, right there. So now you'll see that we got institutions on over 56% of this stock. Why do they hold that? They may be, you may see this slide back a little bit to about maybe 53, 52%, because some probably will get out of the play based on this news. But at the end of the day, there's still a stock that a lot of companies hold. Over 897 institutions still hold this stock, and that's about 900.9 million shares. So do with that information what you want, and man, you can see that it's actually there for the taking, right? So I hope you found value in this, like I said before. If you did, definitely hit that like button. I'll catch you in the next video. Y'all stay safe. Peace.